It took me 5+ years to realize that simplicity is key when it comes to trading. Being able to consistently repeat the same things over and over again is what's going to make you profitable in the long term. Having a repeatable system and a simple strategy is all what you need in order to become successful in trading. So in today's video, I'm going to share with you a simple strategy that you can use every single day in the markets. So in today's video, I'm going to be talking about one of my favorite strategies, and it's based off of price action and liquidity. Price action and liquidity is the only thing that you need in order to be successful in the markets. And if you can master price action and liquidity, I promise you that you'll make a lot of money. So essentially what this strategy entails is that we're going to be waiting for the first 30 minutes to play out. So we'll wait for the first 30 minutes to play out and then mark out key levels, which are key pivot highs and lows, intraday levels as well. And then we'll be using those levels as support and resistance to trade either towards the upside or the downside. So with that being said, let's hop straight into the charts. Right here, we're on the QQQ or the NASDAQ, and we're going to be backtesting one full week of price action. If you guys do want to backtest this yourself, you guys can go into TradingView or any backtesting software and let me know how it goes in the comments below. So the main thing when we're going to be looking to trade this strategy is that we're going to wait for the first 30 minutes to play out. Whenever the market opens, there's quite a bit of volatility within the first 30 minutes. So wait for the first 30 minutes to play out and then mark out key highs and lows. So as you can see here, we'll wait for the first 30 minutes to play out. So you can see right here, I end up playing the first 30 minutes out, and now we can go into the 1 minute time frame and mark out key highs and lows. So you can see right here, we're on the 1 minute time frame now, and what we want to do is mark out key levels. So if we zoom out a little bit here, the levels that we want to have marked out is your pre-market high. We also want to have marked out your high of day level. We can mark out this key pivot low, which is your opening candle range on the 5 minute time frame. So I always talk about this level. If you guys haven't watched my video, make sure to do so on the opening range break and retest on the 5 minute time frame. This is a very key level that we always want to mark out on the chart. Right here, you can see this is coincide with our 479 level. So that's going to be a very key level. And then also we can mark out low of day as well. And then right here, you can see this key level also coincides with this order block. So we can mark out this whole key area and drag this over. So based on these two scenarios, we're either going to be looking for a potential break and retest of this level for a move back towards the downside, or we're going to be looking for a potential move back above your 479 and use this as a retest for a move back towards high of day. So we'll see how price develops around this key level. So right here, you can see we have that confirmation candle towards the downside. Now we want to go short with just to stop a break above your key level, which is your 479.23, right? A candle closure above that level. And we want to look for low of day. So we'll play out the tape here. And you can see price end up tapping our level very nicely. And that's where we want to look to take profits for a very nice solid win on the day. Now we'll go on to the next day that we have. So right here, we're on the next day. This is Tuesday. And now we're going to be doing the exact same thing. We're going to wait for the first 30 minutes to play out. And then we're going to be marking out key highs and lows. And we're going to be looking to use those levels as support and resistance. So we play out the tape here. So you can see we have played out the first 30 minutes. Now we can go into the 1 minute time frame to mark out key highs and lows. So you can now see we're on the 1 minute time frame and we're going to be marking out key levels. So in this case, we can mark out our low of day. We can mark out our opening range candle on the 5 minute time frame. As I always talk about, this is a very key level, right? Your opening range break high and low on the first 5 minutes is going to be a very key level. So I have this level marked out, and of course I have high of day marked out. And you can see right here, as price kind of pushed towards the upside, right? Your down close candles are right here. So this is going to be a very key area that you want to see price kind of bounce off of, which is your opening range high and also coincides with your 1 minute order block as well. So since we have our key levels marked out now, right, the two scenarios that I want to see kind of play out is a potential break above this level, a retest of your 481 level for a push back towards high of day, or I would like to see a potential break below your key 481 level and potential retest of this level for a move back down towards low of day. So based on the price action that we have, we're going to be looking for either one of these scenarios to play out. So as you can see, price just end up tapping into our key level, which is our 481.60 level, which is your 1 minute order block, and also tapped into your 5 minute opening range as well. That's where we want to be looking to get in longs with a stop just to break below this key pivot low, which is our break of structure level. In this case, we want to target high of day, and we also want to target a 2-to-1 risk reward ratio as well. So we'll be looking to take profits off at high of day and a 2-to-1 risk reward ratio. As we play the tape here, so you can see right there, price just ended up hitting our first profit target. We want to take some off at high of day, which is a key level. You can see price as well came very close to our stop loss, but we end up holding this 1 minute order block very nicely, and that's why we gravitated towards the upside, because we still end up making a higher low. As you can see right here, you can see as well, we just end up taking our first partials off at high of day, and now we're going to be leaving the rest for a 2-to-1 risk reward ratio. So you can see right there, price ended up hitting our 1-to-2 risk reward ratio for a very nice second win for the week. Now we'll be going to our third day of the week. So you can see we're on the third day of the week right here. We're on a Wednesday, and now we're going to be doing the exact same thing as usual, and we're going to play out the first 30 minutes of market open. So you can see we have the first 30 minutes played out. Now we can go into the 1 minute time frame. So you can see we have the first 30 minutes played out here on the tape, and we're going to be marking out key levels. So in this case, we're going to be marking out key levels. We can mark out low of day. We can also mark out our opening range candle high, which is our 5 minute opening range high that I always talk about. And in this case, we can also mark out high of day as well. So these are the key levels that we have, and we're going to be using these levels as potential support and resistance. So we're going to be looking for potential break above this level for a retest for a move towards high of day, or we're going to be looking for potential rejection of 487 for a move back down towards low of day. So we'll play out the tape here. You can see so far we don't really have any strong displacement towards either side. We're kind of just chopping in this range. We had a pretty big candle at 10 a.m. So now we can wait for more displacement to either side to look for a potential trade opportunity. So you can see right here, now I have about 1 hour of the market played out. There wasn't a trade opportunity towards the upside or the downside. You can see price was really just consolidating around this opening range high on the 5 minute time frame. We didn't have any clear signs that price wanted to gravitate higher or lower. So this is a great example of when to not trade, is when we don't have any strong price action around key levels, we don't have displacement, and we don't have continuation. So with that being said, let's go on to the next day that we have. So right here, we're on our fourth day. There was actually a holiday the day before on Thursday, so we have to go to the next day, which is Friday. And we're going to be doing the exact same thing as we usually do, and we're going to be waiting for the first 30 minutes to play out. So you can see we have the first 30 minutes played out, and now we're going to be marking out key levels on the higher time frames. So right here, we're going to be marking out key levels. As you can see right here, we're going to be marking out this key high, which is actually your opening range high on the 10 minute candle, and we're going to be marking out low of day, and then we're going to be marking out high of day as well. So based off the price action here, we're going to be looking for a potential area to use as a retest for a push towards the upside, or if price can get back below this key level, which is your 293, we're going to be looking for a push back towards the downside. So we'll wait for price to play out. You can see we're right at this key level now, which is at 10.08. So we want to look for a potential reaction around this level. So look for a potential retest for a move back towards the upside, or we want to see if it can gravitate back down towards 191. So you can see right here, right, price is at this key level, which is your 493.2 level, right? You can see we don't have a reaction, and price doesn't really want to gravitate towards low of day. So we'll see if we can use this level as a retest for a move back towards high of day here. So you can see price ends up tapping into our key level. We end up reclaiming our key level, which is your 493. You can see that buyers are clearly stepping in off this level. So that's where we can look to take an entry long with a stop just to break below this key level. And we can look to target high of day and a 2-to-1 as well. So as we play the tape here, so you can see we end up tapping into our key level once again, signifying that buyers are stepping in off this key level, which is your 493. So as long as we stay above this level, I expect price to gravitate back towards high of day and at key levels above. And you can see right there, we end up just hitting our first profit target. So that's where I'm going to scale half my position. And now I'm going to be looking to leave trailers towards that 495 level and above. And you can see right there, price ended up finally hitting our 1 to 2 risk to reward ratio for another solid win on the day. Now let's go on to the final trading day that I have for us today. Right here, we're back onto Monday, which is a full week here, and we're going to be doing exactly what we have been doing, which is waiting for the first 30 minutes to play out, and then we're going to be marking out key levels. So you can see here, as we play out the first 30 minutes, we can now go into the 1 minute time frame and mark out key levels. So the levels we want to have marked out is our low of day level. We can also mark out high of day, and we can also mark out our opening range candle low on the 5 minute time frame. So you can see this is going to be our key level, which is your opening range candle low on the 5 minute time frame, and we can mark this out. So you can see right here we have our key levels marked out, and we're going to be using this area as a potential retest for a move back up towards high day, or we're going to be looking for potential break below 496 and a retest of this level for moves towards the downside. So we'll play out the tape here. You can see that price ends up having a strong push towards the downside. You can see we end up tapping low of day. So you can see price ends up reclaiming our key level, which is our opening candle range low on the 5 minute. You can see we have multiple touches here, and it's showing that buyers are stepping in off this 496 candle. That's where we can look to take our long positions with a stop just at low of day, and we can look to target high of day. As we play the tape here, so as you can see right there, we ended up getting stopped out for the last day of the week. If you were to risk 1R on every single trade, you would have ended off the week with 5R profit. So I hope you guys enjoyed that video. If you did, make sure to drop me a like and sub. Let me know how the backtesting goes if you guys backtest out the strategy. And I'll see you guys next week for a brand new video. Peace.